Hello traders, Gary Wagner here just after 11:30 in Honolulu, 5:30 in New York. It is Wednesday, May 22nd, 2019, and this is the daily report for gold and silver. Muted action in the precious metals with the exception of platinum, and this all in light of a fractionally higher US dollar and equities modestly lower on the day. In terms of the equities, it seems renewed concerns about the trade war had simmered up those emotions, and that took the market down. What is interesting is although that had a negative effect on equities, it did not have any kind of significant bullish effect on gold pricing today. On today's report, I want to continue to talk about the pattern we disclosed the other day, which is the descending triangle, and see how that fits in with current market action. Traders, let's take a look at the price board. First to gold. Gold closed down 30 cents, a decline of 0.02% on the day. Silver did manage to eke out a modest gain, a gain of roughly 1 cent, currently fixed at $14.42. Platinum and palladium traded lower, with platinum losing 1.29%, that's $10.50, getting close to 800 again at 804.90, and then finally palladium giving up about 50 cents, a fractional loss, currently at $1,312. And as I said, that is in light of a strengthening, although modest strength, dollar index currently at 97.95, and it's not so much the net change to the upside that I find interesting, it's the fact that it's close to 98 on the index, this for the first time in quite some time. Let's take a look at our technical studies. Traders, today we are witnessing an extremely fractional day to the downside, a decline of about 30 cents. However, I believe that the pattern we discussed yesterday is absolutely still in play, but we received very little, if any, information on which way this market would go as it once again approaches these lows here that create that flat bottom. We still, of course, have a series of lower highs, a descending high, with the last high coming in at around 1302. The first thing that we can say is that we need to see what happens if in fact the market trades to this particular line, a break below it on a closing basis, and that is the key. Has to be on a closing basis of 1262, 1263 would definitely indicate a sell signal in the market. Our targets would be 48, possibly 21, but I would look more at 48. However, there's also the real distinct possibility that this level will provide some sort of support. And the best way to look at that is not through a candlestick chart, but rather through a Japanese average chart, a Heikin Ashi chart. And let's go ahead and convert this. Because traders, I think that the best property of a Japanese average chart is indicating trend change or a pivot key reversal, and then most importantly, the strength of a current trend, because that will give us an indication prior to the pivot point as to whether or not it is a fair time to look at it. And what I'm talking about is this. If we take a look at this uptrend right here as the market actually went from the lows and eventually traded to the yearly high at 1315. Look at the size of the candles as they grow as it reaches the apex of the market. In other words, they have no lower wicks, and that's what you want to see on a green candle, and body size is important. So it begins meek, and then it gets stronger, stronger, stronger. You've got an extreme body size right here. However, following that, you get your pivot candle. And the pivot candle was not only a color change from green to red, but an extremely small body with large wicks above and below it. Now, over the next couple of days, you had the body size stay from small to moderately large, but not large by any means. And that stayed in play until this red candle here at the beginning of March. And then the next one is even a longer body. This one is not longer, but is definitely a substantial size. And then look what follows. We see a shortening, and that indicates that the current downtrend is basically running out of steam. And that's what we want to look at. So when we take that information and then look at the beginning of May, gold is at 1267. It trades up to these highs just above 1302. But what is rather interesting about the way that it did that in relation to this type of chart is that the trend really started off pretty meekly. And by that I mean that we saw a series of upper and lower wicks in the market. Then we saw a larger body size, but it still had a lower wick. And that's important. However, the next day, we saw it have a decent body size, the absence of lower wicks, but then you can see that the uptrend ran out of steam. That small body and the return of a lower wick. You had your pivotal candle here, and then you had extremely nice body size here, and it has been reducing ever so slightly since that occurred, and today's is even a smaller candlestick. However, it does lack the upside wick, which is good, but it tells me that this is a point that we would look for a pivot in the market. Now, my sense is, though, if we do see a pivot, it could easily be a false breakout to the upside. That's kind of what we saw here. We went from 67 to 13. That was a failure because it was a lower high. And so, based on those factors, we have an opportunity because I believe that we will test 67, and the key will be whether or not it closes well below it. It has to close below it, because if it just simply has a low below it and then trades back above here, that is certainly not indicative of a sell trigger. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.